Good morning, good afternoon, and good evening, everyone. And welcome to Financial Systems and Cash Flow Management for SMBs. My name is Tosh Brooks, and I'm the Program Coordinator for the U.S. Small and Medium-Sized Business Entrepreneurs at the Nasdaq Entrepreneurial Center. For those of you who may be new to us, the Nasdaq Center is a nonprofit dedicated to helping entrepreneurs access the knowledge, mentorship, and resources they need to start and grow successful businesses. Today's session is designed for founders who are ready to build a stronger financial foundation for their business. Whether you're navigating inconsistent cash flow, trying to get clear visibility into where your money is going, or looking for practical systems that make financial management less reactive and more intentional, running a business often means making big decisions with limited time and resources. Our goal today is to give you actionable strategies around cash flow, budgeting, and financial planning that you can put to work right away without needing a finance background to do it. Before we dive in, I'm going to launch a few quick polls so we can get a sense of where everyone is in their journey. We use this feedback to help shape the programs and resources we provide for this global community of entrepreneurs. While you're answering, feel free to drop in the chat where you're joining from today. We always love seeing the range of places founders are dialing in from. We'll also have live Q&A at the end of the session, so please feel free to submit questions anytime using the Q&A feature. And while the poll is running, I'd like to briefly recognize the partners who make these programs possible. The work we do at the Nasdaq Center is supported by organizations including Nasdaq, Wells Fargo, JP Morgan Chase, KPMG, Walmart, the Asia Innovation Hub, Wilson Sonsini, the Nareet Foundation, KKR, and BPM. Their support helps us expand access to resources and knowledge for entrepreneurs everywhere, and we're grateful for their partnership. Now let's get started. So I want to take a look at the polls. Our first poll was, how are you feeling? How are you feeling? And we had 74% of our founders on the call today are feeling optimistic about their business, and 21% are surviving and a few anxious. Thank you for sharing that. Our next poll. What's keeping you up at night? What is keeping you up at night? Finance, sales, marketing, scale, the pivot? Is it your team or is it surviving? And right now we have about 36% of founders saying that finance is keeping them up at night. Okay. Without any further delay, please join me in giving a warm welcome to our special guest, Catherine Licari, founder of Cash Flow for Creative Small Business Strategist, Columbia MBA, and the creator of the Small Business Planner, trusted by over 6,000 business owners worldwide. Catherine, before we dive in, we'd love for you to tell us a little about yourself and your journey. The floor is yours.
Oh, thank you so much, Tosh. I mean, what an honor, to be here and speaking to you guys. Thank you so much for dialing in. I am just thrilled to be here. So my name is Catherine. I live in New York City. I am a veteran of the fashion industry. And what that means for you is I am a product-based business owner specializing in product-based businesses. When yes, I can help service-based businesses as well, but the thing about product-based businesses is they are so much more complicated. So for those of you, I think it was 36% of you are being kept up at night by the finance in your business. I'd be curious to see kind of in the chat how many of you split between service and product-based businesses, because we can kind of get into that specifically today. But yes, I have been a business owner for the last 15 years and really fell in love with solving this problem that I saw in working with emerging luxury fashion designers in my first business, which was really just that there was so much talent, so much raw entrepreneurial fire, but not necessarily any access to financial, operational, legal, those really like the blueprint of a business. People could not access it, and the information was extremely fragmented for those who could access it. And so that kicked off about 10 years ago, my long journey to solving this. And 82% of businesses will fail due to poor cash flow visibility, which I think is completely unacceptable. And so it's really my mission to reduce that number from 82% to much lower over the course of my career. And yes, went to Columbia for my MBA, and now I focus very predominantly on building my financial education company called the Small Business Planner, where we've taken a beautiful physical product to bring down the fear factor and take the temperature down around these topics, right? And try to make it something that feels approachable because it is when it's actually delivered in a way that is grounded in the language of business owner to business owner versus that like finance, and Tosh nailed it, right? This is about not needing to be a finance pro, right? You are already an expert at what you do. I'm here to help you get the right playbook to do that really well. And at the end of the day, to create profit and value for you, for your customers, and for the world. So thank you for having me.
Thank you, Catherine. I was going just listening to you. You just opened up so well and opened it to the first question that I want to ask. And it is financial systems can be intimidating. We all know that, especially for founders without a finance background, which is exactly what you're saying and what you're trying to fix. What core financial systems should every small business have in place, regardless of industry or stage?
I think the best thing that you can do for yourself right off the bat is to separate your personal and business finances. I think so many people, I even saw on Instagram yesterday with terrible advice of like, it doesn't matter about your business bank accounts. No, let me tell you something. One of the best things you can do for yourself, even if you haven't set up your business entity yet, or if you're 10 years down the road, the best thing you can do for yourself is have isolated bank accounts just for your business, credit card just for your business, and really wall off all of your financial activity in that one place. When you commingle business and personal, not only are you voiding the protections that something like an LLC is set up to give you by commingling those two things, you'll never be able to determine your profitability because you're mixing numbers. And it's kind of like, that metaphor, you can't get once the toothpaste is out of the tube, you can't get it back in, and you cannot untangle the knot of commingling your finances. So that's an easy one, right? It's like set up a bank account and only use that for your business, and you will already be in such better shape.
Oh, amazing. So let's talk about, revenue growth and healthy cash flow since we started talking about
Mhm.
the tube, right? It's
Yes, the
coming in from
tube.
going out. Healthy cash flow often determines whether a business can actually survive and scale. What are some of the most common misconceptions founders have about cash flow? And I know we mentioned Instagram. There's a lot of bad advice out there going on in social
Yes.
media sometimes.
Yeah.
So what are those misconceptions you see?
Oh my goodness. Well, I think the role of time in general is something that we kind of overlook for a few different reasons. Time is a necessary ingredient in your success. So, time needs to be something you're thinking of and being more realistic about, understanding that it's going to take more time than you want. I'm so sorry. It's going to take more time than you want. And what that means for you is having kind of a respect for the challenge ahead of you, and by extension, being realistic about the financial support that you need. So let's say you're building your business, but you still have a full-time job. I am a huge fan of doing all that at the same time so that you can care for yourself, cover your expenses, and take down some of the pressure. So, because your cash flow will be inconsistent in the beginning. And the
Mm,
other reason I bring up time now is because cash flow is a timing challenge to solve. Cash flow is really about it's the money. I'm doing a big training this week, so I have my teaching tool here, my big board. Cash flow is about the cash that comes in and the cash that goes out working in relation to each other so
mm.
that the goal is that your bank balance is always positive. And so it becomes when we think about, I could talk to you about spreadsheets forever, but the reality is most of you do not really want to use a spreadsheet. You want to move toward mastery of these frameworks in your own head. So when you're walking around in your life, you can think in a more grounded and calm way about how to handle this. And so the punchline is cash flow is a timing challenge. And so thinking about when is my business likely to have cash coming in a practical way, and how can I sync that inflow up with the outflows that I have, expenses, investments, whatever, so that those two numbers work together and they never kind of supersede each other, right? That they move in relation to each other. And so when you take these two roles that time plays, the first is that everything's going to take longer than you want it to. So therefore, you need a cushion, whatever that looks like for you, with the fact that cash flow is a timing problem to solve. I think that sets the stage to understand how do we really plan with intention because so much is unpredictable. But if you can isolate really around setting yourself up to be profitably priced, what you then can do is know that every single sale you have is creating value in your business ideally. Those are the fundamentals. It's like cash flow can feel very unwieldy. Like they're back to Instagram, but this is a real thing. People will often say entrepreneurship is like having a ton of money in the bank on Monday, nothing on Wednesday, and then some on Friday. And like riding that wave is a real part of this. But what you can do to control that unpredictable feeling is step back and actually focus on your profitability as soon as possible. So some of you are early idea stage. Some of you have got multi-million dollar businesses. Stepping back and looking at the profitability of your products and services is always a really helpful way to get a handle on cash flow.
Amazing. And so I want to expand on that just a little bit because you're
Hmm.
answering so many questions in one, right? Giving so many
Yeah,
great.
right.
So what I'm hearing you talk about as someone who's been in sales is forecasting. In
Hmm.
forecasting, we know when revenue is unpredictable, it's hard. We don't know what's going on. The economy is crazy, so many things. Are there any other nuggets that you can give entrepreneurs to create useful financial forecasts without getting overwhelmed by the complexity? Like you said, we don't want a big Excel document, right? So without trying to predict the future perfectly, what can they do?
I think you can really become a student of your own numbers. And you don't have to do that in a big, deep spreadsheet, but you want to know things like, what is my average order value? What were my sales last month? You wouldn't believe how many people don't actually really know off the top of their head what they brought in the prior month. So we don't have to talk about big advanced forecasting spreadsheets, 3-year financial models. Like, no, you can get a lot done with just sitting and thinking about what has happened in the last 6 months,
Mm,
really, and going and looking. In the 15th, the final chapter of the Small Business Planner, we have these simple worksheets that just talk about what are your goals for each month in the year for sales, expenses, owner pay. Paying yourself is for many people just think it's like an impossibility, but it is very possible. You just need to have a goal so that you're driving there. So forecasting becomes really easy when you actually just become familiar with your facts. And
mm,
that doesn't mean you need to read your P&L every minute of every day, but it does mean you need to know, what are my average sales in the last 30 days? What are my average sales over the last 6 months? So when we're thinking about forecasting in these unpredictable environment, like we can't change what we can't control. We have to figure out how to deal with that. It's pointless to think, oh, I wish I could control all these things. All you can control are your rhythms, looking at your own numbers. And then when you know your numbers, that's the first step to be able to think about making educated guesses for the future. Forecasting can start to feel really possible when you have the confidence in yourself because you're like, I actually do know what my expenses were last month. I actually do know what my last 6 months expenses looked like. And I do know what my last 6 months sales looks like. But most people, because of the way really that bookkeeping is done in the US, most people don't know those numbers. Most business owners do not have an active dialogue with their bookkeeper, let alone a CPA on the tax side. So they end up floating around in a much more anxiety ridden and chaotic state of mind more often than is necessary due to that. Not due to the fact that you can't forecast. It's due to the fact that it's very hard to get your information clearly, accurately all the time. And that's very much a part of the mission that I'm trying to help business owners with.
oh, amazing. And so to your point, so if we don't know our numbers, right, we're already in a bad place. But what are
Yeah.
some of the warning signs, if any, that founders should pay attention to before cash flow problems become business threatening? Because we know that they're usually a part of a larger operational issue, right? And so that's what
Yeah.
we're going to talk about today. So what are those warning signs?
Yeah, warning signs. The question you asked in the poll, what's keeping you up at night? That is a brilliant diagnostic that you should ask yourself all the time, because that will help you identify sort of like what part of your business is really starting to become an issue. Because it's going to keep you up at night. You know
Yeah.
what's going on. You know what's going on. I would say working toward having, so this is sort of like the solution to the warning sign would be a really good goal for all of us is to be working toward having cash reserves.
Mm.
Like that feels impossible. But when you are below, let's say in your business, because if you know your average expenses each month, if you are below, if your cash balance is below your average 1 month of expenses, that's a warning sign, right?
Mm.
What that tells us is either you have too much going out in terms of cash outflows, then you can really safely support, or by extension, it may also just tell us that your profitability, back to my earlier point, is not set up strong enough for you. Something that in my study of small business in the US has become very apparent to me, and something that I teach, is that most people are not really aware of the concept of gross profit, which is sales minus the cost you have to deliver the sale. So let's say I use a lot of beauty products as reference, usually on my desk. Let's say you're trying to sell a lipstick. You need to know what the lipstick cost you when you're selling it so that your gross profit, let's say this sold for $10 and my manufacturing cost was $2. That means I generated a gross profit of $8.
Mm.
That $8 per unit becomes my budget to run my business, becomes my budget to pay myself, becomes my budget to pay my tax bill on my net income. When we don't really know those unit economics, because it's really easy to miss them, right? It's really easy. We're focusing on sales, we're focusing on building the thing. The best thing you can do is to look at the unit economics of what you're selling, including for service providers. Let's say you sell a service that you have other people help you fulfill. So every time you sell the service, you're going to incur the cost of, let's say, a contractor. The value you sell the service for and the cost of the contractor, there needs to be enough margin in there for your business to thrive. And so often, if you feel like you're constantly dealing with the biggest warning sign, red flag, red alert, which is a critically low bank balance, I want you to step back, and step number one is see if you can figure out what your gross profit actually is every month, because that tells you what is available to use for your own pay, for your expenses, and for certainly reinvesting in the business. And I think most business owners don't get to look past the bank balance as the red flag. That is the biggest red flag. It's the most visible one, and it's also the most paralyzing because it feels so personal, right? You're looking at it on your phone. It's like 2 in the morning. You're like, how am I gonna make this better, right? And it's hiding just in the pricing and your cost structure there. Some other red flags would be, well, back to my point about mixing business and personal, my wallet's right here, right? If you leave the house and you don't have your business payment method, turn around, go back inside, go get it. Because that is a red flag. If you don't have a business payment method in your wallet, that is this little tip of the iceberg to show that you do not have the structures in place to protect yourself by making it easy for you to stay compliant with yourself so that you can have clear financial reports. And then another huge red flag would be warning sign is like, when was the last time you spoke to your bookkeeper? Do you have a few months of emails where you haven't responded to their questions? That's like a ticking,
Yeah.
ticking issue. It's bad, 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 bad. So if all those things, if people that are joining us today are watching this later are feeling like guilty, 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 the good news is if you just start with those small things, you can make an enormous impact. The reality is most people will never pause to do those things.
Absolutely. Thank you for that. And
Mhm.
so I want to talk about since we said something about changing behavior, because all of this is changing behavior as an
Yes.
entrepreneur, right? So I want to move to the psychology a little bit about it. So a lot of cash flow management is tied to confidence and decision making.
Yes.
So how can having stronger systems help founders lead with better clarity and reduce stress when they're making these decisions, even though the full picture isn't there?
Right. Well, the full picture is always kind of an elusive thing to get, I'll be honest, right? Because it's always moving. And part of your question is how can business owners cultivate confident decision making, right? So one of the ways to do that is, like I said, really fall in love with the economics of what you're doing so that you know it cold. Because then all of a sudden, when you're faced with these challenges and these decisions that you don't have a lot of time, to think about the decision. You don't have the world's best decision-making environment ever. So you've got to know the core economic structure of what you're selling cold so that those decisions end up starting to feel really organic and fluent for you. I also would really emphasize that having bookkeeping set up for you in a way that tells the story of your business is invaluable. And it's possible. It's just because of the way the system is structured right now, it's very hard to actually get. Business owners speak one language, finance people speak another one, and without a translator in the middle, you end up with very standard reports that business owners look at and it's like, well, I don't actually see my business looking back at me. So you end up not really using those reports. You get a P&L maybe quarterly and you're like, this is not useful. This also feels out of date. And so what you need is your own version for your business of clear, up-to-date, reliable information. Because when you do have information, so some of the product-based business owners on here might be on like Shopify, right? Some of these platforms now make it very easy to see things like last 30 days revenue, last 90 days. Falling in love with your routines around your facts is the first step because when you've got a source of clear, reliable, consistent information that's up to date, you can begin to use that to sharpen your decision-making skills. But the reality is, in the absence of clear information, anxiety will be the dominant experience. And so, my work really focuses on bringing people in an educational environment so that you can begin to learn this language.
Mm.
It's just totally unrealistic for me to say to you, go find a bookkeeper, answer all their emails, and you will have the tools you need to make confident decisions every day. It's just not true. It would have happened by now, and it hasn't. And so that's where the role of business owners taking their responsibility for their own outcomes seriously is essential. And helping you understand that your decision-making ability is not going to get better until you kind of step into that chair and say, I know that this can be better, and I'm going to start by really getting clear on what are my goals for this year? And then looking and saying, okay, for June, how am I pacing toward my June goal? All you need to look at are your goal numbers, which you know what they are. It's like sales goal, pay myself goal, expenses budget. Do you want to spend more or less than a certain number? And then going and comparing that to what actually happened. Business owners are so talented and so intrepid and resilient and creative. All you really need is a goal and then compare it to what actually happened. Then you fill in the blanks. But decision making will stay very, very, very chaotic feeling without starting to celebrate the fact that you can know these numbers. You just have to look. And sometimes psychologically, it's that first looking bit that can be the hardest to do. But again, if you step back and separate your personal and business, you can just look at the business and you're really going to move in a good direction.
Amazing. So we're arming our entrepreneurs on this call, right? We're giving them things. So if we're going to
Yes.
send them back to their bookkeepers, so if they don't have a bookkeeper, we're sending them to get one. And then we're
Yes.
sending them back to their bookkeeper. We talked, you talked a little bit about, metrics and just the bare bones, the baseline, the actuals versus the projected. What financial metrics or reports should entrepreneurs be reviewing regularly to stay proactive rather than reactive? If they're going back to their bookkeepers today, what do they need to tell them that they need to now have a report for?
Brilliant. Great question. Two answers. The first is the two core financial statements that you need to be getting monthly, not quarterly, and definitely not once a year. Monthly are the profit and loss statement and the balance sheet. I'll explain what they are. The profit and loss statement is a snapshot of your profitability at any particular point in time. You can look at last month, you can look at any window you want, last year, year to date. That tells you, is your business actually making money? It tells you what's your revenue, it tells you what your expenses are, and it tells you what your net income is at the bottom. That's your profit, and that's what you're going to be taxed on. If you're not profitable, you will not have a tax bill in most scenarios. And if you are profitable, you should be saving 35 to 40% of that profit number every single month in a dedicated tax and business savings account so that you are prepared for your tax bill, which your bookkeeper or CPA should be reminding you is actually due quarterly. It's not due once a year, it's due quarterly if you have a profitable small business. The second financial statement you should be getting is a balance sheet, which is a summary of three things. What you own, so that's all your assets. That's going to be cash and bank accounts, inventory, accounts receivable. What that means is invoices that you've sent to customers that are not yet paid. Just because someone hasn't paid your bill doesn't mean you don't own the value of that invoice. You do. Cash out on the street, no problem. You still own it. The second thing it tracks is what you owe. Very important, right? Loans, credit cards, lines of credit, accounts payable, which is the sister to accounts receivable. Accounts payable, if you have any vendor partners that give you terms like net 14, net 30 days to pay for something, again, really essential for my product-based business owners. If you're working with suppliers, you want to be earning those payment terms and the ability to receive your goods, start selling them, and then pay for them when you've generated an ROI on the inventory purchase. And finally, the third thing that the balance sheet tracks is equity, which is what you've grown over time. So it's the value that's baked into your business. What I'll say is, and we've actually now served over 9,000. I need to update my bio. We've served over 9,000 small business owners, and what I can tell you is looking at so many P&Ls, I can tell you that the vast majority of them in this country are not only not accurate, but they are not detailed enough to be of use to the business owner. So what I want you to do when you go back to your bookkeeper is explain to them the way in which you actually sell and generate income. Because most P&Ls are going to show in the first section at the top is sales. Most of them are going to say some version of like sales and then just a number. But you know your business, or worse, it's going to say like PayPal or Stripe, and it's just going to summarize all the deposits from these different processors. But you know that your business is so much more involved than sales or services or Stripe. You know that you've got this type of service and this type of service. Or for me, for example, I've got physical product sales and coaching and our membership. And I want to see that performance broken out by what we would call revenue line. So I want you to go back to your bookkeeper and explain to them, hey, I actually sell in this way. Here are the types of income that come into my business bank account. Can you do me a favor and actually split this out? I want all my Shopify deposits to be coded as product sales. I want all my Kajabi deposits to be coded as coaching, so that you then are looking at a profit and loss statement that actually resembles your business and actually tells the story of your unique business versus just a record of bank activity. Because that's what bookkeeping is. And these financial statements, they show us and tell us what happened in the past. And if it's just kind of the standard template from QuickBooks, it's not really going to be helpful enough and interactive enough to answer those questions that you have. And so it is on us as business owners to lead the conversation around how we want our financials organized. Expenses are a little easier because they kind of just are what they are, right? You've got Zoom, paid Zoom membership, you've got Google Suite, whatever, Dropbox, all the different things. I'm trying to think, what are some of the sponsors of this? Maybe you've got Walmart for office supplies, right? Those are pretty straightforward. But sometimes you might say, I want a little more detail, because a bookkeeper is pretty much going to put anything from a Facebook ad to a podcast studio rental to, you know, social media software. They're going to put all of that in advertising and marketing. You might say, well, the underlying strategy of my business is actually, it's to grow sales using meta ads. So I really want to see meta ads spend as its own category, right? So really stepping back and asking yourself, what is the underlying story that my business is telling in terms of how you sell? And then what are the really important expenses that you want to make sure are very clearly delineated on your profit and loss, so that you can see every month, what did I spend doing the podcast? What did I bring in terms of product sales? So you can compare those numbers, because oftentimes those numbers work in relation to each other, and you don't want them hidden in these other categories where you can't find them.
Oh, awesome. That was amazing. To that point, what should founders look for when hiring outside or external financial support? What questions should they ask when they're looking for that bookkeeper that we're making them go get today?
Yes, right. Well, the most important thing would be ideally you're finding someone who has expertise in what you do.
Yeah.
Now, if you make like I was just on someone on my coaching program is a landscape architect. Now, you don't need to find the bookkeeper that specializes in landscape architects, but you do need to find a bookkeeper that specializes in, you know, multi-location reporting. Or you need to find a bookkeeper who, at a bare minimum, specializes in what you do, whether it's product or service based. So I find some of the problems that I help business owners untangle very often are when product-based businesses have been served by a bookkeeper who really is not seasoned enough in product-based businesses. And only about 30% of all American small businesses are product-based. They are the hardest to run. They have much more complex financials, and the business owners often lack the language to communicate to the bookkeeper in a way that empowers the bookkeeper to give you the reporting you need about your own inventory, your own cost of goods sold, your own inventory asset on the balance sheet. So it ends up with these often very strained relationships because you have someone, you have a business owner who doesn't really know how to ask for what they need. And then you have a bookkeeper who's like, well, I don't think they're going to use these reports anyway, so I'm just going to do it how I think I need it done with incomplete information. And it's all kind of like a bad, perpetuating, ongoing problem. So if you're a product-based business owner, you need to ask, do you have experience with product-based businesses? Do you have experience reconciling with Shopify payout reports? Ask about your platforms. Ask about the tools you use. Hey, you might have, I just started working with a brand that's on the Wix. It's like, well, okay, not very many e-com brands are on Wix. So I was like, I got to learn about Wix, right? Like those platforms are really important. You want to know that the bookkeeper you're hiring is an expert in dealing with the facts of your platform. Service providers, 70% of American businesses are service-based. So you can definitely find a bookkeeper who can support you because they can all handle service-based businesses. So you almost have an even higher expectation for support because service-based bookkeeping is not complicated. Therefore, you should be getting great communication. You should be getting monthly reports. There's no excuse for if you're a service-based business with a bookkeeper, you should be getting those reports every single month because they don't have to ask you as many verification questions as they're going to have to ask the product-based folks. So wagging my finger, the expectation for support needs to be higher. It needs to be higher all over the place, but it's not that complex, and you deserve excellent reporting on time.
Awesome. Thank you. So I want to shift gears a
Yeah.
little bit and talk about how you help founders in your business. So, and we know we talked about it earlier. We're all scared to look. We're scared to open the budget on payday, right? A lot
Yes.
of founders feel the shame and the anxiety around looking at their numbers. How do you help clients work through the emotional side of financial management?
Gosh, such a great question, Tosh. I think the first thing is just acknowledging that everyone's feeling the same way.
Yeah.
We all think that we are on an island of misery. And everybody has felt this. And even what I can say is I see profitability problems at businesses of every single revenue level. So the businesses at 50,000 a year have profitability problems. The businesses at 50 million a year have profitability problems. So I think once we acknowledge that everyone is facing similar fears, similar self-judgment, shame, anxiety, we can sort of start in a calmer place because it's like, well, I'm not the only one that is feeling this inadequacy and all the things. So I just sort of start, a lot of what I do is group coaching.
Hmm.
And so because the principles are the same, the process is the same, and you learn from each other by kind of asking some of those questions around each other. And so, just celebrating the fact that you're so good at what you do. And I actually like to tell this sort of analogy that there are about 2.5 million driver's licenses issued each year in the US. And I don't know, think back to when you learned to drive. If people on here do drive, I'm a New Yorker who drives, so I always use this metaphor. But when you got your driver's license, you had to take a class, you had to take a written exam, you had to take driving lessons, you had to take an eye exam the first time, and then you had to pass a road test before they would let you on the road with a car. There is no credentialing, there's no finance class you have to take, nothing before you can open a business. And now, on the one hand, that's a good thing because we want opportunity to be even, very accessible and widely distributed. But when you open a business without that those prerequisites of the understanding and a roadmap, you end up in a very dangerous place. But that is a universal experience. So I think acknowledging that when you got your LLC, you didn't have to pass a test versus when you got a driver's license, you sure did. You can start to understand how this system actually was not set up to tell you what you needed to know to be successful. It's not your fault, right? But once you understand, oh, there's a better way, then the pressure is on for you to try to take care of yourself in that way by really viewing yourself as a student of language of the money in your business. And if I can leave you with anything today, it is truly to step back from all the noise and the self-judgment and the spreadsheets and ask yourself, what is the underlying story of how my business operates? What do I sell? Who do I sell to? How do I create value for the world, for my customers, and for myself in terms of your pay in every single transaction? You will be able to see so much more clarity how your business can actually grow profitably or where you might need to change either some of your costs, some of your pricing. But that's where I would spend some time to kind of calm your nervous system, give yourself some grace, and then work on practical steps to improve your performance.
Amazing. So I have some questions coming into the chat, but I have one-ish more because
And I'm not really looking at this chat. So
no,
if
you're
there's,
fine.
okay, okay, okay.
I got you. All
I
right.
get
So
too distracted.
I know, me too. So I think it's important because we just talked about the psychology of it all and the emotions of it all.
Yeah.
So, if you would like to share, and I don't like to say what is a financial mistake, I want to say what is a learning opportunity that you made early on that you now help your clients avoid?
Oh, yeah. I mean, there's 1,000 that immediately come to mind. Let me think about. Um, I think I think rushing
Hmm.
is really dangerous. I'm trying to give you something that is universally applicable. Rushing and feeling rushed to make decisions is something that I really watch out for. We're all on our own timelines, okay? There's no race, there's no finish line. The journey is the destination truly. And I've found that I've made the worst mistakes when I rush or when I let somebody else rush me. So I would say watch out for that. Don't put don't put unnecessary time pressure on yourself because it's so easy to make irreparable mistakes when you do. And then I think also, your question about what are some of the red flags is so great because I had this like real come to Jesus moment many years ago when I was traveling and it was like I had major jet lag. I was in London, so I'm like awake at 2 a.m. in my hotel, and I just realized, oh my gosh, I don't have the skills to do this. And that's what prompted me to go to Columbia Business School to really study, I had a fashion company. I was like, I need to go study advanced financial statements analysis, obviously. That's what I thought. And I'm so glad I did because it's taken down the complexity for me. And now I can read someone's financials like I'm reading a children's book. Um, and so yeah, I just think that the rushing is something to really watch out for. And when you've built the foundation around you of, yeah, I do track my sales every month. I do know what I brought in last month. We think so much about the next and the future and next Friday and next payroll and whatever that we don't even retain what's happened 2 weeks ago. And so slowing down and celebrating really knowing what's going on in your business is one of the best ways to protect yourself.
Amazing. So I'm gonna ask this last question, then we're gonna pivot to the Q&A a bit. If founders could leave this session and implement one financial system, process, or habit immediately today that would have the greatest impact on the health of their business, what would you recommend and why?
Well, I would recommend that profit exercise that we went over already, but I would also recommend one of the most dangerous things that you can do is not pay attention to your cash commitments. So, what I mean by that is when let's say you sign up for you make some investment in your business that needs to be paid over time, or you are a product-based business and you order some inventory, or you decide you're going to hire someone by a certain date and you've started onboarding and everything. What I'm trying to say is we need, and you can do this however you want, but you need to make a list of whenever you make a financial commitment. So if that's $1,000 a month for a contractor, you need to have a way of looking at that that says, in the next 90 days, here are all the things I've committed to paying for in my business. And so, for example, with product-based businesses, oftentimes that's like, I placed an order, the order will ship in 6 months, the order needs to be paid for when it ships. So people can forget, like, oh yeah, I need to come up with $7,000 6 months from tomorrow. And so having a visibility into your future commitments, whether that's also your tax savings. And frankly, the tax savings piece, assuming that anybody on here has a profitable business, this is a good example of a similar thing, which is every single month, I want you to, number one, know what your profit is. And you can get that by having some bookkeeping in place. And then I want you to set aside 35 to 40% of that number in a tax and savings account. So that will empower you to have the cash you need in the future to make those quarterly estimated tax payments on time.
Mm.
And so that's a concrete example of why we need to be mindful of what we've committed to. But other ones would be when you make a decision, have a tracker that shows, okay, this means in September, I need to pay for that thing I ordered. I need to have enough money to pay this person. I need to pay myself. And that would be extremely helpful. That's sort of like an advanced blind spot. You could put it in the category of accounts payable, right? And people, if you want to just Google the phrase accounts payable and brush up on what that is, having that on your radar can save you tremendously.
Amazing. Thank you. So I want to pivot because you were answering so many questions that were pieces of questions that folks were asking. So I want to make sure that
Good.
we get a few. In the first one, I think this one will go quick and then we can move in. Is taxable income based on gross or net?
Net. And
Net.
so I'm going to use my board real quick because this trips up absolutely everybody. So you have sales, right? This is your revenue coming in. Then you have, if you're a product-based business, you'll have something called cost of goods sold. So that's the actual cost of what you manufacture. And if you're a service-based business, you might have contractor costs to deliver what you're selling, right? So sales minus the cost that you have of delivering the fulfillment of whatever you've sold, that's going to give you a really important number called gross profit. This is honestly one of the most important things I can leave you with. It's just this concept, gross profit. What this becomes is your budget to pay yourself, to determine what you can spend on expenses. This is not what you're taxed on, but this becomes the value that your business activity generates before we look at expenses, which would be things like overhead, recurring, consistent monthly cost like your Zoom subscription or your employee that you're going to, keep regardless of what your sales activity is. So cost of goods sold is tied to sales. You only incur this expense when you actually sell something, right? When you actually sell the lipstick or you actually sell the contract that then you have to hire labor to fulfill. This minus this gives you gross profit, which you can think of as the value generated by the engine of your business. The value generated by the engine of your business is what you have then to pay yourself, have expenses. So gross profit minus expenses is going to give you your net income. Oh, Tracy, good. I'm glad this is helpful. This is going to give you your net income, which is just a fancy phrase for your profit, your actual profit, your net profit. And this is what you're taxed on. Okay, so you're not taxed on this. You're not taxed on this. You're taxed on this at the bottom. And so super quick guideline, if you have QuickBooks or Xero or any of those tools, I just want you to go down to the bottom. People always say like, what's the bottom line? They literally mean the last line. That's going to show you your profit. And that's the number you want to set aside 35 to 40% of every month to have more than enough cushion to handle a tax bill. And that whatever's left over after your tax bill, you can put it in your own pocket or you can reinvest it in the business.
Amazing, amazing. So I just got a super specific question and I actually want to know the answer. So I'm going to
Okay.
go ahead and grab this. Is there a good ratio for net cash flow purposes, such as AP less than 10% of sales after 30 days or what have you?
Oh, I don't know. I don't think so.
Okay.
Maybe for an enormous Fortune 500 company that has sophisticated enough tracking to tell you this all the time. I think that that really depends on, and obviously it's a great question. If you give me a little more context about your business, I can answer it specifically. But I think AP, and that's accounts payable, so that's like your cash committed that you owe to partners. I think it really just depends on the nature and the story of your business, right? Like I come from fashion and we have a 4 season sort of production schedule. So at some times of the year, fashion brands have enormous accounts payable balances, but then because everything's due at the same time, but then the next couple of months they could have like none, they could have zero. So there's no hard, I am not a huge fan of percentages personally. My work is actually off at lately, increasingly so, being compared to Michael Michalowicz, who wrote Profit First. And I love his work. He's absolutely brilliant. And I just take a slightly different approach, which is more about actual dollar amounts. So I really emphasize people understanding what's your average order value? What's the average amount that you should be moving about in terms of cash through the system of your business throughout a given time of year? And so healthy percentages or dollar amounts look very different for different businesses. And again, back to one of my very first points on this call is it's about timing.
Mm.
Certain businesses are going to have larger AP balances at certain times of year, but it's about stepping back and saying, what is appropriate for my business's structure at certain times a year? And also factoring in what are you personally comfortable with? Plenty of people they can handle, having large accounts payable balances. Other people are like, I don't want to owe a soul a cent. So that I really leave a lot of space for people's own core values, comfort level. How do you want to run your business? There's no blanket percentage in my playbook because it's not all that helpful for people universally.
Amazing. All right, last one. And I'm a mesh with I think it's a great question. And I'm sure a lot of people have this question. If you're not in a financial position to hire a bookkeeper, what is the best way for a founder to get their finances in order and track it easily? And adding, do you recommend any starter financial software for a solopreneur?
Great. So I definitely would tell you that. So I'll answer this by saying any expense you have in your business needs to have a positive return on investment. So the right type of bookkeeping support is one of those expenses that pays for itself 100 times over. So I do just want to kind of shift your perception a little bit about it because bookkeeping gets a bad rap, rightfully so, for some of the systems breakdowns that I've shared on this call. But in the absence of having a bookkeeper, back to my earlier point of having dedicated business bank accounts, that's the hack, everybody. Because think about it, you can export, even if you're not using a software, you can export your transaction activity and just look at the deposits versus the credits, the debits and the credits. And you'll be able to see at least the movement. And you'll end up needing to become a little bit of a spreadsheet jockey yourself, but moving this around to see, okay, well, January, here are all my Shopify deposits, or here are all my checks or my wires, and then here are all my expenses. So you can do rudimentary bookkeeping if you isolate all your transactions in one place. If you've got them on some personal Amex and this and that, a bookkeeper can help you untangle that, but you will not be able to do that yourself. So I think also QuickBooks is great. Look, bookkeeping is a utility. It's only as good as your leadership of what you ask it to tell you. So you can use any sort of software, QuickBooks, Xero. I love Monarch for personal finance, and I believe Monarch is trying to also do this for business. I just heard that today. I'm not 100% sure, but I wouldn't be surprised. So QuickBooks is great. And if you only have your activity isolated in business bank accounts, you can see I actually talk about business bank account structure all the time, which is where the comparison to Michael's work comes from. But if you isolate the activity in a bank account, you can trust that you're looking at the full picture, regardless of who's helping you look at the full picture.
Amazing, amazing. So my takeaway was make sure you have separate accounts, as many as
Big
you
time.
need, separate accounts for all of your
Yes.
ventures. That's my takeaway. So we are going to put how to connect with you, Catherine, inside of the chat, so you don't have to worry about that. But as you leave us with one thing, what would that be?
Oh, I think it's one of my favorite things to say, which is that you are the plan. You are the plan for your success. You are the plan for your life. Do not underestimate your power and your ability to do this. I often see people try to delegate some of this finance stuff away to someone else. You can do it. Keep trying. There's a lot of free resources. We have a blog on my Instagram page. You can do this. And when you plan your profit, you can actually plan your life. So it's really worth getting over that scary psychological hump at first, because it's very much worthwhile on the other side.
Amazing. Catherine, thank you so much for taking the time to talk to the community,
Oh,
share your
my
insight,
pleasure.
and set such a great overview. This was extremely helpful. I learned something. I love your board in the back. I'm an extremely visual person, so that
It
was helpful
helps,
for me.
right? Good.
Yes, absolutely. So, on behalf of the Nasdaq Entrepreneurial Center and everyone in attendance, we thank you for joining today,
Thank
truly.
you for having me, truly.
Absolutely. And for our attendees, we would love for you to join us on our upcoming webinars. You can view the upcoming events on our website at the link in the chat. We thank you for joining us today, and we look forward to seeing you soon. Bye.